Hello everyone, I welcome you all to this episode that I titled uh, Imbalances in Forex Trading. Yes, quick one, if you are new to this channel, please do subscribe. Alright? The reason being that when you subscribe and activate that small bell, anytime I release this video, anytime I release videos, you'll be the first to be notified, And when you like, comment, and share my videos, that will serve as an encouragement for me to make more videos. All right. Today, like I said, I'm going to be diving into the topic I titled Imbalances in Forex Trading. As at the time I'm recording this video, it's 18th of August 2024. All right. So imbalances in forex trading. Number one thing I will be teaching us is the reasons for the imbalances you see uh, in the forex market. And the second one is how you can identify the imbalances when it occurs. And the third one is how you can trade in the imbalance. When imbalance occur, you should know how to trade it. Because when imbalances occur in the forex market, price after which price will still come back and fill the imbalances. So it's an opportunity in case you are a beginner, or even though maybe you're a professional and you don't know about this. Anytime there is imbalance, that creates gaps and all that. And when price gets to a certain level, resistance or support level, price will reverse to fill that imbalances. Or if it does not happen immediately, in future, price will come back to fill those gaps. So it's an opportunity for you to get into it when there's a pullback and, you know, trade that because it's a good risk reward ratio when anytime it happens. So right now, um, when you talk about imbalance, people don't really know what imbalance is all about. So imbalance occurs when there is a significant disparity between buyers and sellers, or you say between buy and sell orders. All right, that is when you see imbalance happen. All right, when there is a disparity, a significant disparity between buy and sell order. All right, that will not lead to rapid price movement. Okay, so anytime you see a rapid price movement, just know that it creates an imbalance. And why does that happen? It happens because there is a significant disparity between the buyers and the sellers that are placing orders. All right. If the orders of buyers are much than the sellers, you will see a significant rapid price movement to the upside, as in rise in price. But in the other hand, if the seller's orders are more than the buyer's order, you see a significant or a rapid drop of price. you will see a bearish movement, and it will then create a significant disparity. All right. So that is the reason why imbalances occurs in the market. Now the next point is the next point is uh, reason imbalance occur. All right, this can happen due to various factors like economic news releases, geopolitical events, or market sentiment. So those can influence it. All right, let's say for example, traders are expecting a certain news or a event to happen, and then what they will do is they will just place an order and wait up to that point where the news will be released. If the news release will affect price to move to be bearish or bullish, they will place their order according to the news release. At that point, you will see a very high volume of orders that will trip into the market, and that will cause imbalance or disparity between the buyers and the sellers. All right, so it's very, very simple, guys, for us to really understand when that happens. You should know that something like news, geopolitical events, or a market sentiment has come to play. That is why you will see that kind of uh, movement. All right. Another point is to how you can identify how you can identify imbalances in the market. All right. You identify them by what? Candlestick patterns. All right. All you need to do is look for full bodied candles with little or no wicks. All right. I am going to be showing you guys this so that you will understand immediately before we move forward. All right. It's something like this. When something like this happen, all right, this full bodied candle, you know that something happens here, and that's what makes the price to just shoot up like this immediately. All right. So that is how you can identify imbalance. All right. You look for a candlestick patterns that is a full bodied candle that has just little or no wicks. Something like this, you see there is no wick, it's just full. That means there is buying pressure. All right. There is buying pressure. So that buying pressure has created imbalance, all right, in between the buyers and the seller. In the future, price will pull back, all right, price will pull back to fill the gap. So that is just it, guys. It's a very simple thing to really identify. You can even see, apart from that, when you see a very swift and rapid movement up, bullish, bullish candle, bullish candle, bullish candle, bullish candle, like that up to this moment. Once price get to a resistant level, all right, because right now it has created disparity, a very significant disparity between the buyers and the sellers. So once it gets to a level, a resistant level, price will come back to interact with this imbalance that this movement has created. So you see price will come down, all right, to fill the imbalance. At this point, is this is an opportunity for you to counter trade. you follow it down. All right, but that is for advanced traders. If you are a beginner, stick with just trending market. Trade when price action is trending up or down. All right, when it's bullish or bearish. Don't counter trade except you know how to use fib retracement tool. You know where the level where price will get to and it find support. All right, but I've made video, I've simplified it for us. You can go into my YouTube and dig the video out. You can, when you go through it over and over again, you will just master it. I really made it very uh, simple. All right. Another point is volume analysis. All right. A sudden increase in trading volume at a specific price level can signal an imbalance. All right. A sudden increase in trading volume. All right. So when price, let's say for example, there are orders placed at this resistance, at this support level, I beg your pardon. So many others are waiting patiently for this price to have a pullback to get to this point. All right. If all those orders are many here, those volumes will make uh, the market to move swiftly, and what will happen? It will create an imbalance. All right, it's very simple. And when imbalance happens, what does it create in the market? It creates gap. All right, price gaps between candlestick often indicate an imbalance. All right, these gaps act as magnets, attracting price to come back to fill them. All right, because once it move up like this, only bearish candle you see here, now it has created gaps, all right? So this gap in the market, in future, price will come back to fill it. It's very simple. Another point is how we can trade the imbalance, trading the imbalance, all right? The first point is the entry point, all right? Enter trade at market pullbacks to the balance area, all right, to the imbalance area. This often provide a very high risk reward ratio, guys. All right, when there is an imbalance like this, for example, then when the price, when price action is to pull back, you just enter, all right, place an entry at market pullbacks, all right. This point here, there's an impulsive move to the upside that has created imbalance. All right. Now, once price gets to this place and it has shown a sign of rejection at this level of resistance, just place your order. You will see that you will just follow it suit down before it will, because this price will go up, the imbalances that is here will have to be filled because there's a gap here. So when it's time for it to have a pullback, you just place your entry and follow it suit to the downside. And it usually provide a good risk reward ratio because you just flush it down to this place without any stress because it has already created imbalance, so it will come down straight to close uh, the gap. So another thing is you can place a limit order. All right, placing a limit order, you use limit orders to manage risk and capitalize on the expected price movement. So if price move from here, you are already seeing the imbalances that it has already created, and you check your own chart, you discover that this place, this very level is what? A resistance level. Why is it a resistance level? When you check, you discover that price has already touched that place and reversed not less than twice. So you just know that that has been established as a resistance level. So once price has created imbalance and is approaching that area, all you need to do is what? Place an order, a limit order. Then once it gets there to that level, before it starts to pull back, your order will be filled. Then you will just be in the trade. It creates a very high risk reward uh, ratio. Another point is for you to combine with other indicators. All right, you use technical indicators like RSI, MACD, or fib retracement level, fib retracement to confirm imbalances and improve trade accuracy. So there are other technical tools that you can use. All right, you can use in combination to really be accurate in your trading. So RSI, most people will say don't know what RSI is all about. It's what is a relative strength index. All right, a relative strength index. That is what we call an RSI. It's a tool. It's a tool, a momentum oscillator used in the forex trading to measure the speed and change of price movement. All right, it measures speed and change of price movement. That is what RSI does. That is what RSI does. All right, it measures the speed and change of price movement. All right, it's developed by J. Willis Weather. All right, and it helps traders identify overbought and oversold condition in the market. All right, so it's very simple, guys. And we also have uh, the key futures. All right, maybe time will not permit me to really go into it. RSI, is used for overbought and oversold level. You can, when you bring out your RSI, it will show you when the market is overbought. When the market is overbought, that means you are expecting a reversal to come bearish. All right. When market is oversold, all right, then you are expecting it will signal a reversal to the upside to become uh, bullish. So, guys, I want you guys to test this strategy. All right, imbalancing, because it occurs every day. This is something that if you know how to trade it, I tell you, you will be very, very successful. Anytime you see a very awkward movement, all right, permit me to use that word. Anytime you see a very rapid push to the upside, for example, like this, all right, or you see a very rapid push to the downside. All right, something like that creates imbalances. All right, okay, let me show you again. Let's say from here now, for example, you see the movement from here, all right, up to this point. You see it up to this point. When price got here, what happened? There was a big rejection, all right? Because right now, this movement has created imbalance between the sellers and the buyers. So that gap needs to be filled, all right? So now, we as a smart trader, you just place your entry here and you see price will take off, it will start going up, and you'll be very, very profitable. Thank you and God bless